Phil Strebel, China's manufacturing is slowing. We got those numbers out this morning. How will that affect commodities, including gold?
Well, the obvious reaction we saw, aside from the grains, everything kind of pulled back. Oil sold off like $1.50. Gold was down like $12. Silver was selling off as well as, and also, the copper market. China's a big player in the commodities, and anytime you see softer readings out of China, you're going to see a slight sell-off in the market. So I think we're seeing some back and fill action. Once the data was released, it triggered some profit taking, especially on those metals, which achieved some short-term overbought status on Friday. So it's understandable for a small pullback.
Of course, sometimes gold is a commodity, sometimes it's not. Tell me, what's your view? Is it a currency or is it a commodity?
That's a tough. You know what it is? A lot of it is perception. And I think it's usually a risk on or a safety type play. Sometimes when it seems that things are so dire or starting to turn dire, you'll see a flight into the dollar index and also into the bonds. Gold prices generally tend to sell off on that type of environment. Now, once gold gets drastically oversold, then you start to see in your bonds are at extremes and your dollars are at extremes on highs. Then you'll see people look at cheaper safety plays, and that's where gold and silver come back in.
All right, we have an interesting week this week because we have the big U.S. jobs number on Friday for June. So how do you play it? Because we're off on Wednesday.
Yeah, I've seen this happen several times where we have holidays right around a jobs report. I'm really surprised that they don't delay it to, the following week after that. So, basically on Friday, it's going to be traders are going to come in Friday morning. They're going to wait for the jobs report. And then the second the jobs report is over, they're all going to leave. So expect softer volume into the second half of the day. Now, as far as gold, if we're still hovering over, or if we get back over the 1600, I would definitely tighten up stop losses, put them below there, or maybe look at very short-term put options. Because I think a lot of the details of, this European agreement, once they start coming out, I think that it's going to soften gold prices a little bit. And the jobs reports have been, not as good recently. I think that maybe we might see a small surprise on the jobs report, and that would put some pressure on the gold market.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to